Ba-da-ba-ba-ba-ba. Hump day, Matt.
Hey, it's Jeremy Powell Wednesday. We're waiting for the Fed. It's awfully quiet. SPOO's locked again within 10-point range, Bobby. We've got a great guest. We got Ben Hunt from Epsilon Theory coming on today. I'm jazzed because it's a good time to talk to people while the market waits for Guffman and Powell.
Absolutely. I can't wait to chat with Ben myself. I have some very storied histories around farming myself, and I can't wait to chat with him about many things, farming included. But Matt, let's run down a few things. We need to pay homage to Kevin Durant, 49-point triple-double. And saved the wounded Brooklyn Nets in Game 5. The man, he's just amazing to watch. He is amazing to watch. He's a true, incredible athlete. The size of his feet blow me away every time because I think that they're actually too big to fit between the three-point line and the out-of-bounds line in the corners.
Right.
Like he's got to be cognizant of stepping out of bounds there.
Well, the thing again. We talked about this. You said before we came on that ratings are down 19% for 13%. 13% for this playoffs run, which is not in a bubble with fans. Okay. And versus last bubble season at the end of the year when they were playing. So it's further down. So nobody's watching this is the bottom line. And not only did he have the triple double 49, 17, 10, 17 rebounds, Bob, 10 assists, Bob. I mean, that's another 20 points. So it's called 25 with the threes, right? So he basically contributed to 74 of those points yesterday. And he played every minute of the game, 48 minutes.
I mean, that seems in today's day and age with the softness of athletes and their thin skins. I mean, that's a high school performance. Like you rarely see that in high school. A kid that, I mean, actually you do see that in high school more often than not if the kid's the best player. Unbelievable. Right. Hats off to Kevin Durant. Unreal.
Unbelievable.
Matt, also now sticking with the NBA, they need a little help. We'll throw some help their way. Chris Paul entering the COVID protocol.
In the age of ambiguity, you have to have the other side for the press. So not only the Suns are, in my opinion, playing the best out of anybody remaining. Possibly Utah's right there, and Utah looks to have the easy road with Kawhi getting a knee injury, and he looks like he's out right now. So for the Clippers Jazz series, which is all knotted 2-2. And then you got Brooklyn now going up 3-2 on Milwaukee, who probably was the favorite coming into that series, especially with the injuries. Kyrie Irving is he's hurt for Brooklyn. So it's going to be an interesting run. But now the key player, one of the key players, not the key player, but Chris Paul is sure playing the top basketball of his life right now. Now, they probably won't start until next Monday, Tuesday, Wednesday, it looks like. So he'll have a full week.
It would appear to me that he'd have enough time.
Which I would think.
You would think. Plenty of time.
Yeah.
All right, Matt. And lastly, again, we tweeted out to Penn Gaming and to Barstools. Let's get this gimmick going already. I mean, the incredible slight to Phil Mickelson at 50-1. Let's get this field bet. Bet the field, the 50-1 field in the U.S. Open. I can't wait to watch, man. I cannot wait to watch. One thing that I just love since I'm such a hack on the golf course, right, is watching like the U.S. Open where they generally struggle to be around par. It's a good U.S. Open.
The winner, I love it when the winner is +1. That's my.
How about it?
My favorite, because you're watching the best in the world struggle like you and I do every day. And they're playing from tees that don't exist for you and I. They're way the hell back there. I mean, what a show.
Right. And then the rough, when you just love it when they just look at their caddy after a ball comes out of the rough. It's like, did you see it? I didn't see it. Where did it go?
Who did my club? I don't know where it went.
And you're like, I do that all the time on the golf course. You kidding me? That's me. Look at me out there.
That's your game.
Struggling like a hack. Look at his hack. Anyway, Phil Mickelson. My money's on Phil early. How about, I've had some good ones this year, right? I said Dustin Johnson wouldn't make the cut in the Masters.
Right.
All right, that's the only good thing I had in golf this year. So I had one good call. Man, let's talk about something that we could actually talk price discovery about before we bring on Ben. And this, it started here. We actually had this on several weeks ago, or a week ago at least. And that, there is consequences to high lumber prices. Things change. So housing starts crashed. But more interesting recently that we've seen are these two things. Single family home rentals as a part of all U.S. housing rentals. And up near that 45% level. When I saw that, I was shocked that many I understand in apartments versus condos, right?
Right.
But single family houses that are being rented.
Yes.
Seems like a giant number.
Yeah, it is. It is a giant number.
And a lot, and we've seen the amount, and this is the total value of U.S. rental homes. Another number that seems fairly incredible. Now that value is at current asset values, which of course can change over time. But a lot of people investing in these are private equity funds, right?
Yeah, there's a lot of, like, BlackRock is the biggest one I've heard. I think they bought something like 50,000 new homes this year that they're just taking from the D.H. Hortons, the Toll Brothers, the Navars, all the Pulte's, all the publicly traded, et cetera, and the large builders regionally, I'm sure. They're buying up everything. So if they say, hey, we've got 50 homes, we'll take them all. We've never seen this in our lives. And you brought up an interesting point, because there are publicly traded REITs that are apartment, they build and develop apartments, and they're typically pretty good companies. And we can talk about those in a moment. But I think the thing that's interesting with BlackRock is they really literally have trillions of dollars at their, back, and are one of the biggest funds. And they're really coordinated also with a lot of what's going on in the policy making that's going on in the government too. And you had an interesting thought, so I want you to just throw it out there, because
my thought when I saw that 45% of homes are rented, you get that number over. Now the people that own their home and live in it are less than people that rent homes. And the first thing that came to my mind, Matt, me, I'm fairly cynical. Right. Because there has been talk of scratching the home mortgage deduction, and how much easier will it be to scratch the home mortgage deduction when less than half the people own their own home? I mean, it's a for sure to be a giant revenue boost for the federal government.
It'd be a huge tax gain for the $6 trillion want, for infrastructure.
I don't know. That's where my mind went when I saw that. I had no idea.
Well, and not to be, just looking at the puzzle pieces, Blackstone's a part of the whole, World Economic Forum group, our friend Klaus Schwab, who wants you to own nothing and love it.
Be happy. You don't have to necessarily love it. You'll be happy.
I'll
tell you when you're happy.
I mean,
sounds like my dad.
You start looking at these puzzle pieces, Bob, and they're obviously a player that can finagle something like you're suggesting, possibly policy changing, and that if they own all those properties, they're not so concerned about the wealth or rather the appreciation levels of those properties, right? They're more at that point. If 50% and more are renting, as you're suggesting, we're close to already, and they take away the mortgage deduction, prices of houses will collapse, and the buyer will be these groups who are buying the properties now, because all they're going to do is rent. They're going to get it's basically a better dividend than owning a bond, because you're paying your rent to them.
For sure. 100%.
So this is like, to me, that's an interesting story. And you got to wonder, and then a lot of these apartment REITs, and let's run through some of these real quick before Ben.
Yeah.
there's a few that I've got 3 or 4 that I wanted to bring up, and I'll just go through them real quick because this is Highwood Properties. And again, these are all apartment type REITs that, we haven't talked about some of these in a while, but this is paying a 4% and they all pay nice dividends. That's why I want to bring these up. This one, Highwood, has it's pretty much come back to where it was pre-COVID. Okay. BXP, which is Boston Properties, is not quite back. So this is the interesting. They're paying a 3.2% dividend. And by the way, these guys own apartment buildings throughout the country and are good size. Boston is a large one. Their market cap, Bob, and paying a dividend is 19 billion. And just for reference, today AMC is off again, but AMC is worth more than these guys. All right.
We talk about the age of ambiguity, but there's no ambiguity about that. We
Right.
talk about all the time. What are the numbers telling you? I mean, that seems ridiculous that
Right.
a bunch of empty movie theaters is worth more than a bunch of
Apartments that are being used. Exactly. And people are paying rent. Ben's going to join us real quick. Let me just run on the one that I think is interesting because Vornado Realty is another large one. It has not come back to where it was, which was trading right around 70 before all this happened. And now they're at $50, paying a fat dividend of 4.3, Bob. So again, I think there's some interest here. Some of them have come back. CLI is not quite back. It's another name. LXP is Lexington Realty. That one has actually made new highs well over where it was in 2020, paying a 3.3% dividend. So these guys are having success during the pandemic as people come in. So why don't we bring in Ben and we'll go on with the show from here.
Right on. Waiting on audio. There he is, Ben Hunt.
How are you, man?
Good. Hey, Ben, how are you? Good to have you on the show.
Good to be here.
We've been talking for a while. I know you and I have emailed in the past about various posts that you've made at epsilontheory.com, which is a must read, I think, for anybody that's micro or macro trading. I think it's one of the best pieces of public information that is out there. And we're happy to have you on here and talk about some things.
Great to be here. And thanks for the kind words. I appreciate that.
You're welcome.
Ben, Robert Heffernan here, HFR from the floor. I spent 25 years in Chicago's commodity pits. We started Market Vitals because, my idea and the stream also was to have more of a free-flowing pit conversation,
Yep.
Not constrained by anything other than your thoughts around trading, price discovery, trade ideas. I mean, the pit was a great place for price discovery, but it was also a great day or a great place for people to, exchange ideas around trading, around cooking, around,
around.
I mean, I told Matt that the worst cooking advice I got was one Thanksgiving, the guy telling me that you had to bring the cheesecloth in and on and off the turkey. And I had like 3rd-degree burns on my hands and face by the end of it. It was ridiculous. But anyway, price discovery and price, Matt and I both think is the only tangible and important thing at the end of the day. But before we get there, I was reading through some of the Epsilon Theory stuff, and I saw that it said that you're a dilettante farmer. And I'm a Western Michigan guy. Matt's a Michigan guy. I'm sure he knew what. I had to look up what dilettante meant. Please tell me about one of your favorite dilettante-ish things on the farm.
Well, the fact that I would use the word dilettante, I mean, that just kind of shows the kind of farmer I am, which is a dilettante farmer, right? So, look, Bob, man, I'm from Alabama originally, right? So, and my grandfather was a dairy farmer. I mean, he had a real farm. So, my wife and I, we moved out into the woods up here in Fairfield County, Connecticut, right? Which, of course, you guys are familiar with Fairfield, which is like saying that to be a farmer in Fairfield County is like, I can, tag into my Wi-Fi to get the video of how to change the oil filter on my tractor, which is, that's about the extent of my mechanical ability is to, unscrew an oil filter and put a new one back in. And, if even that goes wrong, well, I can console myself with you know, an amuse-bouche at the, and an artisanal mezcal at the, you know, the place next to me. So, you know, my grandfather would get a really big belly laugh out of me calling myself a farmer, right? Which is, you know, why I call I am that stock comedic tradition like Green Acres, right? Of you know, the farmer who's, you know, it's aspirational. Let's put it that way, Bob.
That's fantastic. You know, I have farming in my family background also. My grandfather was born in Kentucky and moved to Chicago and started sewing underwear and undergarments in the 20s in this garage, and ended up making a very large sum of money. But what he did was end up going back and buying a farm and moving back to the farm, and became you know, a cattle trader and raiser. And it's amazing how in life you strive for things that you think that you want, and you end up right back with what you know.
Yeah, well, that's, you know, that's true in so many ways, Bob. I will tell you though that even though like the animals we have on our farm are basically pets, right? You know, we've got sheep and goats and chickens and horses and, you know, dogs and bees and all that good stuff. But they're, you know, they're basically movable works of art, you know, as opposed to, you know, we don't raise anything for meat. You know, it's I like the animals that pay the rent, like the bees and the chickens. But you know, even the sheep, you know, they're basically cute and cuddly. We have to shear them, but you know, it's not and by the way, that's the royal we. When I say we have to shear the sheep and take care of the kids, it's my 4 daughters who do it, and my wife. But and that's why we did it, Bob. You know, we wanted to have for our family. That's what worked for us. But you know, Bob, it's also been really enormously helpful for me to, in the writing that I do and the research that I do on markets and the investing I still do, because nature, the cycles of nature that you become familiar with, you know, even in a dilettante sort of way, like I am, it reinforces for you that markets are the same way.
Yeah.
Right. There's a season to everything under the sun, right? And that's true for markets as well. It grounds me in a way that I find it's easy to become ungrounded and unmoored, particularly in the markets that we have to endure today.
The markets that we have with no,
for me at least, it's been really helpful.
And the markets that we have with no cycles.
Yeah, exactly, right. So it's you know, one of the, I'll say one of the most popular notes I wrote was a note called the 3-body problem. And you know, it's the 3-body problem is an old, you know, mathematical proof. It was done like in the 1800s. It's the name of a great science fiction trilogy. But at the root of what the 3-body problem is that, you know, we as human beings, we want to say, oh, here's the algorithm for understanding the world. And I'm sure you guys are the same way. I'm that way. Every trader I've ever known is that way. We're looking for those hidden patterns, the algorithms of markets, right? That, I mean, you say, oh, you know, this happened like that last time. I remember that. And I think that's going to happen like this next time. We're always looking for those patterns, for the secret formula within markets. And the 3-body problem, both in the science fiction setting and in the mathematical section, is about that. Well, you know, there are some issues. There are some systems. They're not chaotic, right? They're not totally random, but they are not predictable. Right? There is no algorithm for what's called the 3-body problem in outer space. Right? There is no algorithm that, okay, I'm plugging the data here and it's going to turn the crank and tell us what the answer is. Even though that's what I think so many of us try to do in markets. Certainly is what I've done in markets my whole life, right? I'm trying to find the answer, the formula. Right, the connection for me with the farm was that so much of what happens with animals, and I'm making this social animals like bees, is that they are also just innately trained to try to find the pattern. Right? And they do it by, where the sun is in the sky. They know exactly when the summer solstice occurs. And when that occurs, they start changing their behavior to prepare for the winter that's ahead. We humans, we're social animals too, right? We're always looking for those patterns. And so when something new comes onto the system, a new planet, in this mathematical three-body problem, the Federal Reserve becoming the biggest buyer of everything in the world, when something new happens, all of those patterns that we thought, were just natural, that, summer is followed by fall, is followed by winter, that may not be true anymore. And so it's trying to find out, well, what are the new moorings, right? In a world that, at least for a fundamental investor like I was, someone who grew up in the church of value investing, right? I've been unmoored for a dozen years now.
Right.
And it's trying to find out, well, what are the new moorings that we can try to use to make sense of markets? Not to find the answer with a capital A, but to see, okay, what on a, hour-to-hour basis, day-to-day basis, what are the touchstones for our new world? What are the new inputs for that? Like any good trader, you now internalize to make better trades and make better investments.
Right.
Since you brought up the Fed, and part of your bio also is you are a doctor in government, yes?
Well, a PhD, right?
PhD.
My grandfather was a farmer. My father was a real doctor, right? So I'm always really nervous about, saying I'm a doctor of anything.
Thank you.
But yeah, I was an academic for a long time. So
all right, I just kind of want to take this tack, since the Fed obviously is acting in ways that it hasn't in the past by a long shot. Yesterday,
right.
Rick Santelli on CNBC absolutely had a Rick Santelli moment and blew his stack about, just like you said, this is a complex system, and how can you predict how it's going to unfold? So two things. First of all, do you think something like this, and what is the government function or the electorate's function on accountability with the Fed? As we go forward, if this does not, end great.
Right.
And then just, your thoughts on this huge part in the system that hasn't been there before.
Well, so I'll start with the second, right? So the impact of this huge, planet, so what happens when you buy trillions of dollars worth of stuff? It creates gravity, right? That's what that math problem, three-body problem is, right? How do you predict where these different planets will be? And you would think, well, if I know everything about it, I know how big it is, I know gravity, I know the laws of gravity, I know all this stuff, I should be able to predict. And what the three-body problem proof is that no, you can't. You can't predict, right? All you can say is, right, the predictions and the models you had before, forget about them because they ain't working no more. So what I would say is that this is the impact of the Federal Reserve, all central banks, as being the most important actor in markets. And that we have to keep our eyes open. Okay, well, what does matter now? What does matter? Because to your first question, I don't know what the end result of this is going to be in 10 years, or if it's going to work or it doesn't. There's a great line by George Soros. I use it all the time. And it was when he was doing his trade around the British pound, when, he famously broke the Bank of England. He had, Stan Druckenmiller, back in the day. And, he was talking to somebody at the FT or some reporter. He was talking about what they were doing, what they thought was happening, right, with the Fed and with currencies, with the pound, and why they were betting against it so heavily. And the report said, sir, how can you predict that, right? How can you predict that's going to happen? And Soros said in his, Hungarian accent, which I could try to do it in a Hungarian accent, but it would just come off really bad, right? So, but he had this great line which says, young man, or whatever he's saying, I'm not predicting, I'm observing. I'm not predicting, I'm observing.
Right.
And I think that's what we have to be now. We have to be profoundly agnostic about our models and our, the formulas that we had in the past, and we have to adapt, right? My strong view is that, and frankly, this is what good traders have always been able to do, right? A piece of news comes over the tape.
Yes.
And in today's world, the piece of news that matters is what we call in game theory a missionary, what somebody like Elon Musk is saying,
right.
what somebody like Jay Powell is saying, right? Like somebody like Angela Merkel is saying. And this is what good traders do. They've internalized this ability to say, okay, this tweet comes across, right? This piece of news on a policy or an idea comes across the tape. Do I press it or do I fade it? Right? And that's what a good trader does 1,000 times a day.
Yes.
1,000 times a day. Do I press it or do I fade it? Mm-hmm. And what I'm trying to do in my research over the last 12 years, because, investing on fundamentals and value just doesn't work when you've got this gigantic new planet and its gravity and the system. I'm trying to find out, not big predictive answer with a capital A for how to think about something coming across the tape. But, there are rules, there are ideas that I'm observing about, I'll call it narrative, I'll call it about these statements by the Powells of the world and the Musks of the world. And it's that where I think that anyone is involved in markets, whether you're trading on that, professionally, or whether you're just saying, I've got to manage my own money and protect myself over a long period of time. I think that's got to be our focus. I really do, right? And, do you fade it or do you press it?
Or do
whatever time horizon that's meaningful to you.
Yeah. And it's interesting because I'm going to ask you a question because before you came on, Bob and I were talking about what's going on because of the Fed and the zero interest rates, negative interest rates worldwide. We've been talking about housing and what's going on with the Blackstones buying up everything that's coming on the market. And it looks like today, what is it, Bob? Like 45% of housing now is owned by private public trading type equity, capital entities, private equity, real estate firms. Blackstone is the biggest right now that I've been able to see out there. And you've written about this quite a bit in the past. I'm curious your take. Like, Bob thinks, again, kind of to your point, do you what's the bet here? Is housing doomed as far as the overall pricing because maybe they take away the mortgage deduction in the future because 60% of the housing now is owned by somebody else and you're renting? Like, this is something he's thinking about because he's like, and which makes some sense, right? This is kind of what you're talking about, which is the next chess move that Soros might make, which is, hey, maybe mortgage companies are going to go, bye-bye because you don't need a mortgage because the deduction's gone and the housing prices collapse. But now these are basically bond holdings of the Blackstones because you're going to pay the rent every month.
Yeah, look, I think it's in the same way it's kind of not just difficult, but in a lot of ways kind of counterproductive to try to think about, I'll say, calculating or predicting what's going to happen 3 years out. I find, I'll just say for me personally, my brain can get kind of whirling dervish on a lot of this, right? I can be very creative in thinking about all the things that can go terribly wrong. Right. I mean, my hedge fund, I really focus on being a short seller, right? Because and this is a bug, not a feature, right? It's just kind of how I see the world. I see the flaw in things. So I can, I've got to set up guardrails for myself personally as an investor or a trader, because I can go into whirling dervish mode and go in and say, oh my God, I gotta short, every mortgage finance company, rockets a zero or something like that, or I can definitely work myself up into that, and so I find it necessary to set up the guardrails to kind of not allow myself to do it.
Yep.
What I will say though is that where I think we can all do better as traders or investors is maybe not to think about the 10th step out, right? And now look, you could absolutely identify a situation where if everybody's on one side of the boat,
right,
meaning that nobody in the world thinks the mortgage deduction could ever get diminished or much less taken out, then there should be an asymmetric risk reward trade for you to put on essentially as an option, right? A policy option if that occurs.
right.
You'd want to set it up really long dated because you're not going to be sure of the timing of this and like that. I get where you're going, and that can play a role for kind of like tail trades that you set up.
Right.
But that's not the bread and butter, really, I think of anyone who's going to stay in markets for long. Right?
No.
It's the sort of tail trades, those, oh my God, this could happen, and then vol and this particular thing explodes. I'm going to set up a little option position that gets paid off if that happens. But that's not our bread and butter. Right? What I think is our bread and butter for everyone is to think about things like, well, to what degree, my answer is going to be a very high degree, are inflation expectations becoming embedded in the American consumer's mind around autos and housing?
Mm-hmm.
Autos and housing. I go back to, when I was running a fund, we had a career year in 08, actually. Long short fund, we were running probably 20-30% net long in 08, and we were up 20-something% net. Just a career year for us. But it was set up going with what we were seeing, observing, to use Soros's approach, right, in Q4 of 07. Because in Q4 of 07, what you saw was a real rollover, a real mark down, not up, like saying, but down in pricing for autos and housing.
Right.
And for all of this, again, kind of why I like being out on the farm, because it connects me with real world. I think real world still does matter.
Yeah.
It's on the kind of big barge-like stuff, like, is there going to be a crash like in 08 around real estate? Are we going to have an inflationary surge, my view, right? Driven by the real economy? Forget about what the Fed tells us, right? What's happening in the real economy? And I think the US real economy is still driven by autos and housing.
Right.
Autos and housing. And you saw that roll over in Q4 of 07, and that got us looking at a lot of things that paid off for us in 08. I think if you look at what's happening in autos and housing, and forget about the official inflation rates, like owner's equivalent rent and stuff like that. We're talking about this today, about, BlackRock and, private equity buying up single family homes and driving up prices. We're talking about it because we're all thinking about, oh, well, housing, the price of my house is going up, right? The price of the neighbor's house, could I sell it? We're all thinking that. I guarantee you, everyone listening to this podcast has been thinking about, oh, should I sell?
Yeah, for sure. No,
what kind of?
It's interesting you say that, because people that I are friends with and know that I'm in markets, they watch Bob and I's show, they like it because it's entertaining and they learn. They're having this conversation with me. I mean, I can give you 6 close friends that have nothing to do with, the markets, and they're like, gosh, I should sell, but then I got to rent. I'm like, yeah, but rent's cheaper than owning still.
Rent's cheaper than owning, right? Yeah, and so everyone in the country is having these conversations, and everyone, and suddenly everyone's thinking about, crap, I got more for a trade-in, on my used car practically than it costs to buy the new car.
Right.
So everybody, this is what drives both deflationary expectations, like we saw 07 going to 08, but it's what drives inflation expectations going into the rest of 2021 and 2022.
Right.
And I could give a flying F, right, about, 5-year break evens.
Right.
Right. What I'm talking about is what is I'll call it, what is the behavioral psychology of the American economy right now? And inflation expectations, I believe, are well embedded in housing, in autos, and increasingly in wages. You're increasingly seeing wage price embedding with inflation as well. And so when I see that happening in the real economy, right, observing, right, not predicting, not saying, oh yeah, in 5 years, the mortgage deduction could go away, and but observing what's happening today. It's like Paul Tudor Jones, right? He was on CNBC the other day saying, look, if the Fed's going to say keep on with this, speak no evil, hear no evil, see no evil bit about inflation, and Jones saying, yeah, I'm backing up the bus on some of these inflation trades.
Right.
And it's that sort of approach, right, to thinking about housing and housing prices and the like, that I find really useful as an investor, as a trader, in a way that I don't find all this could totally blow up in a couple of years. So that's how I'm kind of thinking about it, because I agree with Jones on this, right? I think the Fed's locked themselves into a box because they can't raise rates, right? Look, we all saw what happened in Q4 of 18. Right? When they tried to normalize even a little bit. Oh my God. I mean, the world practically came to an end, the financial world.
Right.
And, they say, oh, we've got the tools for this. We can do that. So, BS, right? They don't have the tools to taper. So they've got to hope, right, that
their
stuff does get embedded.
Their strategy has been for a long time, hope and a prayer, for ssure.
Right.
And keep pressing. And by the way, they're going to keep pressing, to your point. It's not, even if they raise a quarter point in the quarter, in the next quarter, which they probably will.
They won't.
They might.
No.
There we go. We got a trade and a bet. They will and they won't.
Well, I'm just saying they should again, but I don't know if they will. I have no idea.
Amen, brother.
I mean,
they should. I don't think they will. But here's the thing, Matt, because this is really important, kind of getting back to trading, right? What's driving markets, for the last 12 years on the short term is not the fundamentals, right? It's not the real economy, right? It's what is the narrative? What's the story? I'm telling you guys, the Fed won the narrative battle in May about inflation being transitory. I can believe in my heart of hearts, like Paul Tudor Jones does, and I think a lot of other people too, that inflation is well entrenched in the places that when it gets well entrenched, it's going to grow from there. I believe that in heart of heart. That's not the trade right now. That ain't the trade. Look, the 10-year isn't at 1.75. The 10-year is below 1.5. Right. So, for now, and this is why it's when you think about this stuff, it really is don't fight the Fed, don't fight the narrative. I'm prepared for those inflation trades. I'm not putting them on right now, right? Because right now, the dominant narrative, and this is the stuff that I write about all the time, is, it's transitory. Now, I think that's a load of crap. I don't think it's transitory. But what I think, and 275, that'll get you a subway token, right? I mean, who cares what I think?
Right.
I care when I think about what I could set up when I see the narrative shift, because I think it will.
Correct.
But for right now, the narrative
is
transitory.
Even your macro views, Ben, are influenced directly then by pricing, is what I'm hearing you say. And you must follow the herd right now because the momentum is such, and as you said, inflation isn't going away. It's only going to, increase, especially, when you look at the supply issues that the auto companies have. I mean, to your point, like you can't even the used car lots are empty because those people are buying the used cars because they can't get the new cars, and the economy's open, right? So, yeah.
Right. And I don't think that this just say that what is even behind that is a reversal of globalization, right? Which is a force that has been maybe, I think it's arguably the most important macro driver of the past 30 years has been increased globalization, particularly with China at the center. And that barge of more and more globalization, its impact on supply chains, its impact on management, corporate practices, that barge hasn't just stopped, it's now going the other way on the river. Globalization is a profoundly deflationary impetus. The reversal of globalization is a profoundly inflationary effort.
And that's because things get localized.
Things get localized. Things aren't as cheap. What China really exported for the last 30 years is deflation.
Right.
China exported lower prices.
Well, it's like selling a, let's say, I've got a widget, mine's red and yours is blue. Other than that, they're exact same. But you've been paying 3x for the blue. Well, China comes along, they're the red, and it's the same thing. We'll take the red. To your point,
everyday lower prices, right? What's Walmart? Walmart is China.
Yep.
You know what I mean. You know what I mean, right? So they are the storefront for globalization and lower prices, which is freaking great. My standard of living is higher,
correct,
because of this. So I'm not saying this is good or bad, right? I'm not saying globalization is awful. No, globalization has been directly responsible for a significantly higher standard of living for every American.
Mm-hmm.
That is just a fact, right? It is also something that gives more political power to China, which I ain't too happy about either.
Correct. I mean, I was going to say, with that globalism, you have this, and I believe we're in the midst of it. We're basically, I've said this for the last few years, we've been peaking as a world as socialists, which globalists are socialists, right? We have been peaking. And when you say that to people, they're like, no, it's just starting. I'm like, no, this is why they're fighting so much right now, because it's coming to an end. And I think we're shifting back from a public structure that we've been in for the last 40 years, going back to the early 80s, really when Reagan started, that's when the socialism started, which is the irony, right? To your point again, but we're just observing, and this is what I observe, that government, not just in the US, but everywhere, the Euro, Australia, China, etc. Nobody, everybody has gone full on socialist, at least attempting to control this, and ultimately I think it's going to swing back. The pendulum's going to go back the other way really hard. And to your point, on the private side, yes, you'll have some inflation, serious inflationary pressures, because everything is going to become more and more localized, where it's been so globalized. It's got to come back to the to the local economies.
And look, man, I tend to resist using the label of socialism on anything, frankly, because I think it creates, everyone's got their own immediate image. They auto-tune that. It's hard for them to hear kind of what you're saying when you use that particular word. But I know what you're saying. What I'm describing is that let's call it, again, I'll use my kind of word to get people auto-tuning, globalization. We're seeing a reversal of that.
Yes.
Not a moving forward of that. And that is inflationary at that supply level. Look, the conflict between the US and China, and between the US and Russia, the regionalization of the world, which is the other aspect of a reversal of globalization. That's happening too, right? We're not going to have, friendlier relationships with China in the future. Right. It's going to be more tense. I'm not saying it's a war or that we should. I'm not saying any of that. I'm just, again, I'm describing what is. I'm observing. These tensions are increasing, not decreasing.
Right.
And
The
those are
the
all
saber rattling is getting louder for sure.
absolutely on both, both Chinese domestic media, our domestic media. We this is one of the things we analyze, and the drum beating here is absolutely increasing on
How do you,
both sides, on every side.
you said you analyze it. I'm curious. What do you,
Yeah.
what do you have any tools? Like, what do you use to?
Yeah, Matt, I was going to ask the same thing, Ben. Matt is a market profile distribution expert. I mean, I got to tell you, Matt is one of the best I've ever known at market profile distribution. I'm more of a standard deviation, momentum modeling, and both of us agree full-fledged that time frame and fractaling is incredibly important in your analysis. And I was just going to ask the same question. What kind of technical or other than fundamental analysis do you prefer?
Well, you were talking about kind of news flow, right? And how you interpret
That's right.
Chinese
That's
media,
right.
U.S. media. So I'm curious, what types of filtering, or I know there's programs out there that you can buy that can put, besides Google Analytics, there's some more advanced tools out there. So are you using some of these tools? Have you developed some? I'm just curious.
No. That is what we do in our research. We build our own tools.
Okay.
Right? There are a couple of, as you say, kind of third-party providers you can license. They're pretty expensive, right? So
They're very expensive.
Third-party, there's expensive, or more expensive than a Bloomberg license, right? Which is crazy expensive.
Yes.
Just trying to sell. But Bob, to your point, what we're trying to look at is the difference between structured data, price volume data, that technical analysis that traders look at all the time. So there's structured data. We're looking at unstructured data. We're looking at a transcript of an earnings report, right? We're looking at a transcript of, a CNBC segment. We're looking at the post that's put onto stock tweets, or to the Bloomberg site, to everything that gets published in the journal and the FT and everything else. All of this stuff is available through big data, right? So we got a Dow Jones license and a LexisNexis license, and so all the unstructured data, all the words in the world, you can access like that today.
Right.
But what we do, and so big data is important. What's even more important is what I'll call is big compute. Is being able to plug into the wall and get AWS from Amazon to get as much computing processing power as I like. Because the nice thing about structured data, price, volume, and the like, is it's structured. And we've got some really great toolkits, or just a freaking Excel spreadsheet, right? That you can do a lot. You can do a lot in Excel. And forget about if you've got access to Bloomberg, or you've got access to your own kind of tools that you can build and create around structured data. Unstructured data, all these words and things like, it's possible this was my academic career, back 30 years ago. This was what I was working on back in that PhD thing, right, a time ago, was trying to make sense of unstructured data. I was doing it to try to understand the narratives around politics.
Yes.
Today, I'm doing it the narratives around markets. But what it boils down to, it's not, we haven't invented cold fusion. These are algorithms, these ideas that have been around for decades. What makes a difference today is our ability to do it at massive scale.
Right.
Because what you're doing to put some structure onto unstructured data, you're basically comparing all the words to each other. And so I'll give you a quick numerical example, right? So let's say you've got 1,000 articles. We call them it's a bag of text. It's like a bag here, and each of these bags, you've got 1,000 of them. Each of them has 1,000 words or phrases or units of meaning. Well, that would actually be a small sample set in this kind of research. 1,000 bags, each of them with 1,000 marbles inside. Well, you've got to compare every marble to every other marble.
Right.
So that's 1,000 factorial. That's half a trillion.
That's a huge.
And you've got to do that in a few seconds.
Yeah.
So that's what I mean. It's not a complicated thing that we're doing, but it requires enormous computing processing power. That's how we kind of got to build it ourselves.
Right.
But that's what we do. That's what we do in our research. That's what we try to use to try to guide us. I'll put it this way, to externalize what good traders had internalized, right? A good trader, they can't read everything, but they got a sense of, all right, I'm hearing this from Musk, I'm hearing this from, Mark Cuban, I'm hearing this from Paul Tudor Jones, talking about crypto.
Yep.
And it's all kind of talking about the same thing in the same direction. I can't see everything that's tweeted or written about crypto or the subject, but a good trader says, I'm picking this up. I'm gonna press this. I'm gonna press this. What we're trying to do is we're trying to build the tools to systematize what I think good traders do internally all day long.
And obviously you're trying to delve through that data set to make some sort of predictive model out of it. Yes.
Yeah. That's what we did, right? So again, that's what all of us are trying to do. We're trying to figure out what's the formula, right? What pattern can we observe? And what we're trying to do is I get the not just the desire, but really the necessity to look at patterns in structured data, which is what technical analysis is. It's looking for repetitive patterns in structured data. We're trying to do the same thing, but in unstructured data. So it's a different way of skinning the same cat, not to try to look forward and predict the future 2 years from now, but to observe what's happening now in market dynamics. What both technical analysis and our analysis does, we're looking at behavior.
Yep.
Right? Technical analysis doesn't tell you a damn thing about the fundamentals.
No.
And neither does what we do.
Right.
And
which is interesting because, as you said, you've always been a fundamental value investor. So you're really you've gotten your approach down to a reality, which, as Bob and I say, it still always comes down to price. But what you're basically describing is what Bob and I call nuance, and you may call it the same thing. But you're looking for secrets within the data that can hopefully be a little early and allow you to position yourself before the masses that are all leaning the other way start going the other way. And I think
right.
And I think as a trader, that is what my job is. My job is to find, I'm surfing every day. I'm looking for waves to come in. That one looks okay, but I'm going to pass. I think there'll be a better one. I'll wait for that wave. And what you're doing with the data from whether it's scraping Twitter, StockTwits, Bloomberg, Reuters, etc., right? You're obviously maybe doing some basic keyword stuff, and then you're adding in when they talk about the numbers and they say this, and you start seeing these patterns again evolve. I'm curious, have you found any? Have you found some that you're willing or wanting to share?
Sure.
I'd love to hear one.
Yeah. Well, I'll describe it this way. So what we find in our research is that there are a finite number of financial media stories. We call them archetypes. You can think of it as like a script. Mm-hmm. And the example I use is, so I don't know.
How many are there? I'm curious. How many do you have?
Well, it depends on what it is you're looking at, right?
Okay.
So like, I'll use a television example first of all, right? So the Friends, the TV series Friends, a sitcom, even if you've got like Friends, I don't know how many episodes they ended up filming, a couple of hundred, I think, maybe 300 episodes, right? There are, with sitcoms, there are only about 7 or 8 scripts, right? You change the characters around, you change the time, but it's 3 acts, and you've got about 7 or 8 scripts.
Right.
That's it.
It's formalized.
Well, like Law and Order, right? Over 500 episodes of Law and Order have been filmed. There are about a dozen scripts.
Right. Well, I've read the same thing about all big screen movies. I think there's 27. There's 22, 27. I don't know the number, but there's 27 archetypes, scripts that pack in there.
Yeah. Correct, right? Okay. So that's what we try to identify, right? So it's now some of these are I'll say positive scripts, right? This is, you know, it's a feel-good romantic comedy, right? Others of these scripts are, oh my God, this is a tragedy, depressing script, right? But they're just a finite number of these, and so that's what we try to identify. And so I'll give you one around we were talking about earlier, the Fed, the central bank. We think there are 5 scripts for how we, meaning people who are involved in markets, for how we talk about the Fed. The one that's best for markets, but it's the rarest, is, let's call it the Fed put. So when the Fed put narrative archetype comes up, they've got our back, you know, whatever it takes, you know, to use Draghi's words back in 2012. When you see that archetype develop in financial media, I don't care how awful it looks in the world. You cover all your shorts and you lever long. Mm-hmm. Cover all your shorts and you lever long when you see that archetype. Here are the other 4 archetypes that we see. There is a hawkish and dovish, and then there are archetypes for when everybody's talking about unemployment, and archetypes when everyone is talking about inflation. So in March,
are there hybrids of these 5 sometimes?
Well, all 5 are existing to some degree on there, right? So the stories are always there. What we're looking for, what's the dominant story?
Understood.
And how we call it how cohesive is the story, right? Because each of those stories, right, can have a lot of different subplots or threads, but is it coherent? What we're talking about is the structure of narrative. Not are they using mean words or nice words, but what's the script?
What's the message?
Right. Right. And here's what I say. So when I said earlier that the Fed won the narrative battle about financial market participants say, yeah, I think they're right. Inflation's transitory, so there's no reason for the 10-year to be going up to 2. It should be back to 1.5.
Right.
They won that battle in May. That's what we saw, right? And it creates the dovish archetype is right now the dominant Fed archetype. Hasn't been that way for a while. So coming out of, in March of last year, you saw that Fed put narrative archetype develop. So in our model, so we went way long in April, which, you know, worked out great. Soon after that, these Fed put narratives, they don't last long.
Right.
It entered into an inflation narrative, which is still moderately positive for markets, because people say, oh, it's inflation, that's okay, equities are going to do well. And then for about 2 months there, it went into a hawkish narrative where people say, well, they're going to tighten, right? I'm not sure exactly when, but they're going to start tightening and tapering. And that's negative for markets. And then last month, we saw it made the switch from hawkish to dovish, which is, again, a positive market environment.
Mm-hmm. And then we sit here today with the FOMC coming out in an hour and change. I'm just curious, like, do you think it'll be, does your not your predictive, but your analysis look at what he might say before also, and then how you react to it? No, okay.
No, it's reactive, right? Again, I can't predict, I can only observe.
Yes.
But we can observe really fast and really quickly. And
so you have contingent ideas, thoughts, trades that are ready to go.
Correct. But the trigger is not structured data. The trigger for us is not something that happens in price or volume.
Right.
The trigger for us is something that happens in narrative.
Something that's said. So today for you is very important.
Well, here's what's really key. Yes, it's important, right? So any sort of kind of news event is important. What's more important is what's the follow-up.
Yes.
Right? It's not what does the Fed announce at whatever, 1:30 or 2, whenever they announce it. But what's the press conference afterwards? And what's the Wall Street Journal and CNBC and FT coverage after that?
Right. So that's what I'm saying. All this information that's going to be gathered after today for the next 2 or 3 days is really what you're consumed with.
Let me ask you a question, Ben. From a former pit trader and a cynic at heart, do you try to model do you ever look at the shittiest predictive outcome that your model is and just fade the terrible predictive model?
Are
there narratives that they seem like they'd be one way, but the market just always acts the opposite of what your intuition would be around it?
So it's a great question, Bob. What we have found, right, is that our models that we invest on are contrarian. And here's what I mean by that. You might think that, the drum beating around whatever, consumer discretion, because this is what you also see, right? The business of Wall Street is to come up with a new story of, what you need to buy, right? And so these narratives have a life cycle. You can see, like I say, once you start looking for them, you see it happening. You can start seeing the narrative for, you need to buy financials. We've got a steepening yield curve. You really need to buy financials, right? And you'll see that drumbeat start to go up, and that's when the drum beating just starts. That's when you want to be overweight. That's when you want to go long financials, right? Because I promise you, 4 weeks, 5 weeks into it, man, now the drum beating is getting really loud. Right. Everybody's talking about, oh yeah, steepening yield curve. That's great for financials. You got to be in financials.
Right.
And that's when you want to fade it.
Yeah.
That's that, Bobby. So you're exactly right. What we're looking for is actually, because this is what the street does. It's an advertising model, right?
Yeah,
they're saying no.
Well, and as I always tell Bob, the masses are always asses.
Right. So again, Bob, to your point, we've got a model that looks at social media engagement. Right. So how many times does a Wall Street Journal article or a Bloomberg opinion piece, how many times does that get forwarded onto Facebook or onto Twitter or the like? The metadata associated. Track that really carefully. Because once it starts getting really high social media engagement, once the doctors and lawyers are tweeting about how, yield curve. We know all about the yield curve. Man, run for the hills. Short that puppy. So that's exactly how we look at this stuff.
Yeah, we talked about this before on several different cycles, like when the cab driver in New York says he's quitting driving a cab because he's flipping condos so well, the condo market's reached its peak.
Right on, brother. Right on. Or today it'd be Dogecoin, right? The same thing.
Or meme stocks. Yep. Well, Ben, listen, I really appreciate it, and I hope you'll come back on. I don't want to take, you got to work too.
This is a blast. I had a blast, guys. Thanks for having me on.
And I'll invite you back on because there's so much more we could talk to you about, and I've enjoyed it. Bob, do you have any more questions before we?
No. Let's let him get to that farming.
Exactly,
Ben, I wanted to tell you.
Matt, Bob, so I will put up, if anybody wants to read about the stuff we've been talking about, it's epsilontheory.com. We've got tons of material there. We do free newsletters and all that stuff. So come check us out at Epsilon Theory.
Absolutely. I just wanted to share with you a little story about our farm, Susanna Farms in Lake County, Illinois. And we did a fall festival for a bunch of years and had the petting zoo and had the you pay the quarter to get the feed out to feed the goats. Yep. And then I did a cooking episode for a sidekick project I have, Manja.tv, and we were cooking Sunday gravy, Italian Sunday gravy, and we were using the goat meat. And I said, it's funny, little did they know they were feeding the pets, which is what the Sunday gravy is right now. Sorry, kids, for all your quarters.
Ooh, man. Yeah, see, I could never go there.
A rough. Anyway, Ben, thank you so much.
Circle of life, man. It's the circle of life. I love it.
Yeah, absolutely. I really appreciate your time. Thank you so much. And I'd love to continue the conversation at a later date, and we'll see where all of this this Fed discovery pans out. See how it pans out.
Very good. Very good. Thanks a lot, guys. Talk to
Thank
you
you,
later.
Ben.
Talk soon.
Bye now.
Hey, Bob.
Yo.
Great show. And it was great having Ben. And if anybody has any, again, epsilontheory.com, if you're not already subscribed to, as he said, he's got some premium newsletters. He's a wonderful writer. I'm always blown away by people that can talk about markets. Even Ben talks about markets in a way that I can understand, and then parlay that into the way that I look at them. And that's what he brought up, I think, is the key point here, Bob, is that we're all looking for edges, and he's looking for an edge just like I am. Some of us have.
Yeah, I love the thought process of all the work's great, but is it actionable?
Right.
And not only that, when you deploy, like when you actually deploy, do you actually make money? I mean, that's the end of that's the most beautiful thing in the world, trading, because it's you get to see it in your P&L.
Yep.
You're either golfing at Pebble Beach, right, or you're golfing at Aspen Lakes.
Right.
On how you trade.
I like Aspen Lakes better. I've played both.
I love it. All right, so we're waiting on the FOMC. Let's just talk a little bit about crypto. We didn't get a chance because he's written a bit about.
As we speak right now, crypto just hit 38.5 below, and let me try to, your thoughts on that, because yesterday when we were talking, it was 41.2, and it was breaking out. Remember, I was like giving it the old air quotes about how Bitcoin is breaking out again, and the Twinklevoss.
We've had that. It's put in a bottom.
Basically, you can fade the Twinklevosses as soon as they start pumping. The thing's going down.
In fact, maybe Ben should just have a model for trading Bitcoin based on the Twinkle Toes tweets.
Yeah, I mean,
how predictive that is.
It's almost like Davy Boy with Penn. He stopped, thankfully. Like, he realized that he was the cooler for his own company, so he stopped talking about it. At least I don't follow him every day. So, but here's Bitcoin. This is right when we were talking about it, yesterday's show, right at 11:30. We spiked, and how about it? I mean, the same. We're doing a show not even 24 hours later, 22 hours later, Bob, and we're down at the low 38, which I think is the low of the week now. So because we opened up here Monday. Here's the midnight. I'm just going to use midnight because I don't have any other metric to when open and close is for Bitcoin. So that was 39.2, and we're at 38.4. So low of the week for Bitcoin as we push press and play and record here at Market Vitals. So again, I think you got to continue to short this. The Bitcoin sector, which is all altcoins, because they all follow the big dog, they all follow Bitcoin. Nothing's changed until it closes over 42. Then you still have that overhang at 46. So don't get too excited that the Twinklevoss boys, after we had they weren't here's the thing. If they started telling me to buy at 30,000, we'd be at 20, but they tell me to sell. They don't tell me anything except when it goes up. And then they start beating the bushes. And I'm like, you guys are useless. Like, there is no actionable, to bring it full circle. There's nothing actionable.
Well, wait a second though, because Ben could actually run this metric.
I know. I can tell you that by following them, I can tell you every time they talk, when it's gone up like this 30%, it's the kiss of death for the thing. So
time to sell.
Yeah.
Time to sell. They are unable to hold that weekly momentum level.
And as we get into here, I think you could trade down to 37.5 quickly. I mean, we could be there by the time the Fed speaks this afternoon. Whatever they say about dollar, blah blah blah, we could end up right back to where we were. So it wouldn't surprise me.
All right, Matt. Thank you so much,
Bobby.
Please join us at marketvitals.io. And get an opinion based on risk reward and just what the profile or standard deviation modeling is saying to us. And you'll probably learn how to do it yourself relatively quickly. But you need to join the community, marketvitals.io. Thank you so much, Matt.
Thanks, Bob.